All right, so yeah, I guess we can begin right now. But yeah, thank you guys so much for coming to today's Technical Tuesday session where we try to look at primarily the Euro USD and the US dollar Japanese yen and try to analyze those pairs from a technical perspective. So we may go over a little bit of fundamentals as well, but the primary purpose of these sessions is just to give you an idea of how we sort of approach the market. Even though this is just the tip of the iceberg, we share a lot more content within our premium community. But for those that are free members, this is specifically for you guys, just to give you guys a taste of what we do, and also help you guys out, because I believe that you guys deserve an opportunity to know what's happening as well. So what we're going to do right now is analyze the Euro USD and probably go to the Dixie or the US dollar index, and then look at the US dollar Japanese yen as well. But with that said, we can move forward and start analyzing this chart. And right now we're looking at the fiber, or what we call the Euro USD, and we're looking at the daily time frame. And as you guys can see, last week we had a nice expansion to the upside. Price expanded higher after really creating this triple bottom that we see on this daily time frame. If you look at the charts, we can see that we had this one-to-one measured move. We had this impulse move, price corrected, and then we had an equal measured move. This one-to-one measured move right down to this same area right here. And right around here is where the market started consolidating. It was really kind of hard just to figure out what was happening. But as you can see, price did form what we would call either a double bottom or triple bottom. We see this is the left bottom, and then the second bottom right here, and then this is the third bottom. So then it tested this area of support 3 times. So then what we want to do is draw a line to identify this area of support, and it's really right next to the 111 institutional level, or the $1.11 institutional level. But what we're going to do is draw a line right here to identify this particular level. So then, we have this level, and we have this institutional zone as well, which provided support for this particular pair. And ever since price tested this level the 3rd time, we saw a nice bounce or a rally to the upside all the way up into this zone of resistance up here. So then I can go into more details about why this particular area is an important key area, but for the sake of time, I'm not going to really go into too much detail now. One thing you have to understand is that if you look at the stochastics below, which is one of our momentum indicators, it's currently overbought, which means that we could potentially see a reversal or a correction in price take place right about now. So then only time will tell what will happen. We just have to wait and see what the market gives us. But if you zoom into this area right here, if you zoom into your chart right here, we can have a closer look at these candles, because we want to also look at price at the candlestick level. This is what we call price action trading. So we had this bullish candlestick. And then right now we have, this is yesterday's candle, and currently today's candle, it's currently bullish, but we don't know how the day will end. But bearish, but we don't know how the day will end. But one thing that we want to do is look at this level right here. Let me just draw it in for you. This low of this previous day's candle. This is what we're concerned about right here, because if price does break and close below this low, then it supports the reasons behind why we should see a nice, decent correction lower before we see, a continuation of that impulse or expanded move to the upside. So then, this is how the Euro USD is currently looking right now. We just have to wait and see what the market gives us, but there's a likelihood that we could see price begin to correct right about now. So then we'll see what happens. Yeah, good morning, everyone. This is me, Marvin, and I'm gonna, of course, talk about what we see technically here, but also add some a little bit of some fundamental and intermarket perspective on why we could potentially see US dollar strengthen in comparison to the euro, and us see further weakness in this pair, and a break below these lows. And it's primarily due to just the start of the week. There's been a pro dollar sentiment. We've been seeing the dollar benefit as a result of just some optimism regarding the trade resolution between US and Mexico. You remember over the weekend they came to some form of resolution over border security, immigration, and even tariffs. Right now they're going to President Trump announced that he's not going to move forward with imposing tariffs on Mexico exports from Mexico. So then this provided some level of relief to the market. It provided some support for Treasury yields. We saw the U.S. 10-year Treasury yield rebound, which creates or really supports strength in the dollar, or helps to build demand for the U.S. dollar. So then even for the past two trading sessions, like this was Monday, which was the first trading day of the week, we saw a little bit of U.S. dollar strength kick in, and some bearish activity. It closed below the open of yesterday, the week open, and we can see sort of like a similar type of price action here, where it countered some supply up here, some area of resistance, and it appears to possibly want to slide lower. But this is the daily chart. Anything can happen within the next few hours that can change this type of perspective. But it appears that for today we are seeing a pro-dollar sentiment. We're seeing risk-oriented assets benefit as a result of some of the positive news coming out. But what's interesting, see, just like I said before, anything can change. Which is also good. It's goes in line with what we of course anything can happen, but as you guys know, we're currently long Euro USD, and we have our target at, I believe, 1.1335 or 34, right around there, and price almost hit that overnight. It went to around 1.1332, and then it started sliding lower. So, we was almost there. It almost hit our first target, but it didn't hit our first target. We saw that US dollar strength kick in, but all of a sudden, while we're on this webinar, we seen some US dollar weakness, or something create this bounce in the Euro USD. So that's just the way the nature of the market has been lately. But and I was going to say, it could be pricing in what we may see with some inflation data coming out. We have PPI numbers coming out in a little bit, which may also influence the price action in the dollar. But just like Melvin said, we're seeing a little bit, about a weakness in the US dollar, despite what we're seeing as far as the support among Treasury yields. Now, if we go to the US 10-year Treasury yield now, we may see signs of things changing. But I guess for the sake of this webinar, we're going to just stick with what we see here. But the key is to always follow price action, identify what the intraday trend is, and trade what you see. You remember their common phrase, which is really relative. The common trading phrase is, the trend is your friend. And whatever the trend is are showing you at that particular moment, it's just wise to actually follow the technical clues presented within the trend for a particular currency, and and trade based on that. But so then of course we're looking at this from a daily time frame perspective, and what we always recommend, especially at Forex Anatomy, is that you use multiple time frames in order to get a clear idea of what the market is doing, or what each currency pair is doing. There is absolutely no way you can really know with 100% certainty what's happening with a given currency pair strictly by looking at one or two time frames. You have to look at multiple time frames in order to get an idea of what's really going on. So then, typically we start with the weekly and then we work our way down. In this case, we started with the daily because we felt there was no need to go to the weekly. But what we want to do is drill deeper and try to figure out what's happening on this pair. So then if we zoom out, and if we go to the 4-hour chart, Let's do that now. Go to the 4-hour chart. Okay, I know it's acting a little bit slow. Just please bear with us. It's taking some time. Okay, and let me expand this out a little bit. But on the 4-hour chart, what we did was wait. This is the reason why we entered our trade. We waited for this correction right here to take place. And as you can see, we entered our buy not too far from this correction. And we're currently long Euro USD at the moment. And I'm expecting price to possibly double top, maybe reach the highs and then push lower, but you never know. And the reason why I say you never know is because if you look at your 20 simple moving average lines, let me just drag this up so you can see it. But this blue line right here represents our 20 simple moving average line. And as you guys can see, this line right here, this blue line is sloping upwards. It's a nice steep slope upwards, which means that there's likely still momentum to the upside. So then that's the reason why we want to hold to our original bias and not panic and just see if price could really work its way to our target at around 13.35. So then we'll see what happens with this particular pair. But I'm expecting it to double top. In other words, I'm expecting for price to do something like this. We saw this move to the upside right here. Price corrected. And then I'm expecting to see price retest these highs again. And then for us to see price possibly fall lower. So that's something that I think may happen. And we'll see what happens. So yeah, but this is with the Euro USD. And before we move forward and look at the US dollar, one thing I want to mention is that, you know, lately it's been kind of tough finding good high probability trading opportunities. They're far and few right now. So, you know, whenever you see the market moving like this, the best thing for you to do is not to try to force something to happen. Like, just don't trade off of what you think will happen. Just make sure you build multiple confirmations. Make sure you have a plan. And then if you don't see a trading opportunity that fits your plan, do not try to engage the market. Just stay out, because oftentimes you'll end up making a mistake if you trade that way, and you'll end up losing more money. So then don't, like, for instance, like one mistake that a lot of traders make is that they feel they have to be in the market every single day in order to make good money trading the markets. And that's just not true. So we want to really demystify and really break or destroy all the misconceptions out there about trading the markets. One thing that we've learned over the years is that patience and discipline is really the most important skill that you can develop as a trader. And if you develop patience and discipline, and if you have a good trading model to follow, i.e. Forex Anatomy, our trading approach, then you will do fine. You will do very well, and then you'll end up being a good trader. And over time, you'll be able to trade professionally and full time, because that's our goal, is to help you guys become, you know, full-time traders, especially if you guys join our premium private community. But the lab. yeah. I don't know if you heard Marvin in the background, but yeah, our premium trading community called the lab. You can join that for $1. But with that said, I'm not trying to pitch that program. What we're going to do right now is go to the Dixie. So let's do that right now. The Dixie, for those that may not know, is the US dollar index. So we're just going to go there and take a look. So then, as you guys can see, price has been fairly bearish on this pair. It created this double top, sort of similar to what we saw with the Euro USD. It created this top, or more so triple top. price fell and expanded lower. We saw this slide lower, and then we saw this correction. And as you can see, each time price corrected to this 20 simple moving average, we saw a fall in price. So now you have to look at those footprints. The market will oftentimes leave footprints in the sand. So then right here we had price test this 20 simple moving average area, and then we may see dollar weakness. That's what we're expecting. We're expecting to see the same thing.
Consolidation.
Yeah. So then that's what we're seeing right now on this pair is this dollar weakness. We saw the strong bearish candlestick. Price is retesting this 20 simple moving average. Yeah. It gapped higher, and price is now testing this 20 simple moving average, and we could see that dollar weakness continue lower.
Yeah, but you can see here how the forces of supply and demand, how at the current moment, just like Melvin mentioned, we would typically see a repetitive pattern of it, popping, reaching a 20 simple moving average, or in this case, a 20 simple moving average, and it's slide lower. But you can see here how it's consolidating at that correction. It retraced and is consolidating at the highs of that retracement, slightly below this 20 simple moving average. And that's just really due to the forces of supply and demand, how there's the bulls and bears are sort of in a tug of war, because even though we're seeing treasury yields supported and rebounding, there's an argument to push the dollar higher, but at the same time, technically there's a case for it to slide lower. So then you see that consolidation taking place, that moment of indecision in the market, where of course right now traders, investors are trying to figure out which way they're going to trade the dollar. But of course, this is what's happening.
Yeah, and what I want to do, I'm just going to zoom in to this area so that we can see price action more clearly. So then we're going to zoom in. And as you can see, I just want to show you guys just the battle that's been taking place between the bulls and the bears. And really, over the past few days, even to yesterday, the market has really been moving within this range. We see this high up here at 96.93 and this low down here. We see these consecutive lows right here after price gapped on Sunday, which is Monday, for depending on which part of the world you're from. But the market really has been in consolidation, and right now it's hard to really figure out where the dollar really wants to go. So then if you're not in a position right now, then your best bet is just to wait for a breakout. Either break below this low right here, because we have a low and we have a high. So then you can just wait for the break of this low right here before you decide to go short. If price breaks below this low, then that's when you can look for opportunities to sell the dollar. In other words, you'll look for opportunities to possibly buy Euro USD, or any other dollar denominated currency. You can look for that opportunity as well. So if we do get that push lower, let me just draw it in. If we do get that push lower and a break below 96.67, then that would confirm dollar weakness, and we should look for opportunities to short the dollar on pullbacks or retracements in price. So then we'll look for something like a break to the downside, and then a pullback, and then price continues sliding lower. So yeah, that's for the US dollar index if we see a break to the downside. However, if we see that very same break to the upside, or if we see something similar but to the upside, which is right around here, then that's when you can look for an opportunity to buy the US dollar, to trade in favor of the US dollar. So what you can do is something similar. You can just wait for the breakout on the Dixie, which is probably more safer, even though you have to be warned because we are approaching this 97 institutional level. So then price could find some supply or some sellers positioned right here to push price lower. But if we get a break above this 97 as well, then that's when you definitely want to stay bullish on the dollar, and then you could just wait for the dollar to retrace, and then buy the dollar. Oops. Okay, let me buy the dollar. Yeah. Okay, I don't know why it's not. Yeah, but let me do this again. Yeah, for some reason it's
You'll get the error.
yeah, this computer's getting stuck a little bit. But yeah, so then that's what we'll be looking for, guys, if we do see that type of price action. So then either way, we're just waiting for a breakout in order to confirm where the dollar is headed right now, mainly due to this consolidation that's taking place right here. And you can see, like, look at all these candles. We got the doji type candle,
Spinning top.
sort of like, sort of like a doji. But you know, when I say doji or spinning top, whatever, what I'm really saying is this: is that when you see wicks on both sides, that can sort of give you a clue of what that the market is in indecision.
It's in a range bound.
Yeah, it's range bound, and there's an indecision in the market. So then we see that indecision here. See that indecision here. We see that indecision
Spinning
here.
top.
We see that indecision here. From here, we just see that there's demand still. The bulls at the support right here at the lows. And depending on how this candle will close, will also determine what type of market we're in. So then we have about 40 some minutes before this candle close. So then we'll see what happens. But hopefully for us, we'll see more continued dollar weakness, since we are currently long the Euro USD. So all right, so if there aren't any questions about the Dixie or the Euro USD, we can move on and look at the US dollar Japanese yen. We can take a brief look at it, and then in today's Technical Tuesday session. But let me zoom out and let me go to the US dollar Japanese yen. And I'm not really going to go to I'm just going to start with what we see right now on this time frame, which is the 4-hour chart. And there's quite a bit that I can share with you guys. I'm not going to go through all the details now, but what we do see right now is that price is consolidating, and it's really consolidating at an area of strong demand or support. And well, yeah, let me just take you guys to the daily, because it is important for you guys to see this. So then we see that price is testing the same area right here that price responded to before during that flash crash. You see this long wick that was due to flash crash that happened earlier this year. But this area is really indicative of support. So then what we want to do is draw a line to identify and isolate this area. Also, if you look to the right, we can see that this same zone is where the 108 institutional level is. So then we have the 108 institutional level, and that just proves to us that we're at a strong level or area of support or demand. So then what I'm going to do is just draw this in right here. Okay, this is good enough. And also, support and resistance is a zone. Typically, we draw in these boxes or these rectangles to identify the zone. But for the sake of this webinar, we're only going to draw the lines. But let's go down to the 4-hour. Okay. So yeah, so then right now we're going to go to the 4-hour, and I think like a number of things can be happening, but I think we may see a deeper correction to the upside on this pair. We can see that price consolidated, and then we had a break to the upside, and then price retraced, and then we had a push higher. But also, if you guys you know, there's a reason to believe that this is also a bearish continuation pattern as well, mainly because of what we see here. Let me just draw it in for you. I'm just going to briefly draw this in for you guys, but we see I'm just going to draw it in for you guys. Then I'm just going to clone this line. And what we're going to do is drag this line to the bottom. And what I wanted to show is that there's a possibility that, you know, this could be a bearish continuation pattern as well. And I think I probably drew this a little bit wrong, but let me modify this. It should go right here. And right here. Yeah, let me do that. And let me delete this. And let me clone this line. But what we could be potentially seeing is also what we would normally call a bearish flag pattern. So, you know, for this pair, you know, we have this flagpole, and then we have this consolidation. And oftentimes the market will leave footprints, just like we said before, because we can see in this last move lower, we saw this move down, and then we saw this consolidation and a break to the downside. We're seeing the same thing. We see this consolidation. We see this move, this expansion lower, and then price starts consolidating. And then there's a possibility for us to see a break to the downside. However, with the way it's looking right now, we can see that price seems like it wants to break above this ascending trend line resistance, or this channel resistance of this bearish flag pattern. So then we could see, you know, get a good opportunity to enter a sell order shortly. So then what I want to identify is this particular zone right here. Let me just draw it in for you guys. We're just going to draw in this zone, and let me just change the color. And we're going to draw it from this low right here all the way up to this area right here, right? So, you know, right around 109 flat to 109.45 is where price could potentially go, and where we may see a possible reversal in sentiment. So then this is what we're expecting for the US dollar Japanese yen. Just wait for price to correct into this zone, and then once it does, look for that selling opportunity upon bearish confirmation. Also, we have this trend line as well that may be respected as well, so then be mindful of that as well. But let me just draw this in for you guys and show you guys what we're looking at. So then we can see price push higher into this zone right here. And then right when price is within this zone, we can see a nice bearish move to the downside. And remember, the market moves symmetrically. So then there's a possibility that we could see a measured move. Whatever the distance of this trade is, or this move is what we can see in that next move. So take the length of this wave and project that right where price, you know, may retrace to. So, all right, guys. So then, yeah, that's pretty much it, guys. That's with the US dollar Japanese yen. So then wait for price to correct into this area of structure resistance right here, because this is where we believe some sellers may be positioned in the market. And I have this red dashed line because actually that's where I have a price alert. So I'm waiting for price to reach this area before I look for an opportunity to sell. And I think it coincides with what we're seeing on the daily as well. If you go to the daily, I think that could be almost where the 20-day moving average is, I believe. So yeah, and it's exactly where our 20-day moving average is. So So then, yeah, we may see that type of price action take place. But yeah.
Yeah, and I was gonna say, yeah, like eventually, just like Melvin mentioned, we should see, this currency pair rotate back into the yen. I know for most of the, you could say probably for a good portion of the year or the past few months, we've been seeing the yen benefit because of its safe haven status, because it's the world's, whenever there's misery in the world, whenever there's issues going on, the yen always benefits. The yen loves misery. So then we see here how the primary trend is to short the dollar and go long the Japanese yen. And really, some of those core fundamental issues that really caused or created this safe haven flowing to the yen haven't really been addressed. So then, of course, what we're expecting to see, of course, this a period of correction up to this area of supply up here, and then a rotation back into more yen strength, or a preference for the yen, which would mean to sell the US dollar versus Japanese yen. So then that's what we're expecting right now. I know we had some data come out, some inflation data, which showed that on the annual basis, PPI came in at 1.8%, which was below the forecast of 2%, or the Fed's preferred inflation target. So then, of course, the central bank is going to constantly monitor the status of inflation to sort of determine how they're going to move forward with monetary policy, whether they're going to provide stimulus in the market to help boost inflation, or whether they're going to keep things the same and just move towards hiking rates. But in the meantime, what we've been seeing right now is some global growth concerns weighing on various assets. And as long as that's still on the table, and we still have issues between US and China and their trade negotiations, and sort of like a stall between, trade developments there, we may continue to see more of our safe haven assets eventually become preferred as investors want to move into safer harbors and sort of insulate themselves from pending risk that may occur as a result of some of these unsettled issues. But yeah, this is the US dollar versus Japanese yen. At the moment, it's following what we see with treasury yields. Treasury yields are popping higher. So then we know that there's a strong correlation between the US 10-year yield and the US dollar versus Japanese yen. But that may soon phase out and decouple. We may see a decoupling of that for a period, and a rotation back lower into the preferred bearish trend, or slide lower.
Yep. So that's pretty much it for the US dollar Japanese yen. Yeah, we don't have too much to share in regards to that particular currency pair. We're just waiting for this correction, not right now, to take place, and see if we can get a good selling opportunity to form in the market. But it may be safer to take your profit down here, not shoot for extended targets, since we have all of this huge area of supply and support down here. It may be wiser not to shoot for extended targets. Just target the lows and just get as much as you can. But with that said, I guess we can eventually close out. One thing I want to let you guys know of, especially for those who aren't a part of our premium private membership, we highly recommend that you guys do join if you guys want to take your education to the next level. We have a series of video tutorials and content that can help you guys. But let me just take you guys back into the members area so you can see how it looks. So then, this is our members area, and we also have what you would call the Grand Slam trading strategy. But I'm just going to give you guys a peek just behind the scenes of what we have here. But yeah, Marv, did you have something you wanted to share?
Oh no, I was just wanted to point out, up here, I know we have mentioned that our next trading session begins in 23 hours. So then, of course, 3 times a week we try to meet with our members to sort of discuss the market. We go over various asset classes, various instruments. And of course, you can join for $1. I know our next webinar is within 23 hours, so you still have time if you want to take a peek of that for just $1. But just like Melvin mentioned, we have a plethora of just various resources, and it's still growing. We're still growing the community and growing the education back here. But then we have our Grand slam trading strategy, which is pretty solid and pretty good for those of you guys that want to really expand your trading, what do we call it, repertoire, your trading arsenal. So then this is a good strategy to learn. But then we have these various sections and modules that you can look at to sort of help with your learning, enhance your learning. We have various tools and resources and even archives of recordings that you can look at. But yeah, this is our Forex Anatomy, the lab trading community.
Yeah, and also we have a private Telegram channel specifically for our premium members. So then usually on that channel is where we provide more information, and we usually give you guys updates on various trades that's trades that we're entering into the market. But yeah, you can join for $1 if you want to. No pressure. But if you're serious about your trading education, then we highly recommend that you do that. But with that said, I guess right now we can close out for today. I don't think we have any questions. If we do, now is a good time to ask any question you want. It could be Forex related. It could be on anything. It could be about our private trading community. Just let us know. If you don't have any questions, then we can definitely end early. But it's about 7:38. I know we're 8 minutes past our 30-minute session. But we really want to give you guys time to ask whatever questions that you may have. But if you don't have any questions, then that's great. Our next Technical Tuesday session will be next week. So for those who do not decide to join and become private premium members, you will have access to us next week, and you can also see how we're interpreting the Euro USD and US dollar Japanese yen. If you guys want more pairs to trade and understand how we analyze other currency pairs, then you can join our private community. Yeah, so with that said, I think I'm going to probably end today's session. Thank you guys so much for coming. I know Brandon, yeah, he's a premium member. Thanks, Brandon, for coming. We'll definitely see you on tomorrow's live trading webinar. And thank you, Gabe, for coming. We really do appreciate you guys, all of you guys. We really do appreciate you guys. So please come, please support us. We're going to send you guys recordings of these videos. So then please share the link of that recording. We usually put it on YouTube. So then if you can share the video, if you can comment on the video, if you can like the video, that would be great. That would help us out a lot. But thanks again for coming, guys. Thanks, Alex. I know he's one of our premium members as well. Thank you guys so much for coming. And yeah, let me just ask you guys, give me your input. What do you think? Has your knowledge improved when you became a member of the private trading community? You can just say yes or no. I apologize for putting you guys on the spot, but you can maybe just comment and say maybe yes, it was a good decision, or no, it was a bad decision. Even if you say no, I'll be totally fine with that if you haven't learned anything. But yeah, thanks, Brandon. I know he chimed in. He said yes. Alex said yes. So then thanks again for chiming in. But yeah, I guess we can just end today's webinar. Today is my first day. I know Gabe said today is my first day, but from what I have seen, it is great. Yeah, thanks a lot, Gabe. We really do appreciate the feedback. And this is really just the tip of the iceberg. I know we share a lot more good stuff within our private vault, our training vault. And really, to be honest with you, we have a lot more information to put back there, a lot more that can really give you guys an edge in the market. So then, we really want to help you guys become good traders. But even with these Technical Tuesday sessions, you should be okay. You should be an okay trader, because even with the free stuff that we share on these sessions, it's a lot better than stuff you pay for, to be honest with you. But I'm not going to really toot my own horn. I just really want you guys to get good information, because there's a lot of bad information out there when it comes to trading the financial markets, especially currency trading. There's a lot of horrible bad information out there, and we really want to share the good information. We really want to help as many people as possible become successful traders. So with that said, thank you guys so much for watching today's Technical Tuesday session. If you guys have any questions, you can contact us. There's a contact form, I believe, on our Forex Anatomy page. You can just go there, and our website, forexanatomy.com. You can go there, contact us, ask us any questions that you may have. But thanks again, guys, for everything. and we'll definitely see you guys next week if you guys don't join the private community. So, all right, guys. Talk to you later. Have a wonderfully blessed week. All right, guys.